Welcome to the Milk Check, a podcast from TC Jacoby and Company, where we share market insights and analysis with dairy farmers in mind.
Welcome, everybody, to the Milk Check. We're recording this particular podcast on August 5th, 2025. We're having a classic market discussion today. And with us are Josh White, head of our dairy ingredients group, Greg Shear, who heads up our milk marketing group, Mike Brown of Jacoby Dairy Market Intelligence, Tristan Sullentrup, and myself. We're going to just quickly speed through all the products and talk a little bit about what the demand and supply looks like as we transition from the heat of the summer into the fall. This time of year, what we're usually watching, the weather's hot. Milk is starting to get a little bit tight, and then school starts up in a couple of weeks, so the bottling plants start needing more milk. We start shipping milk to the southeast, and that tends to start a progression of tightness, not only in the milk supply, but in the supply of all dairy products as we get into the fall and the holiday season. So we'll go ahead and start off with Greg. Hey, Greg, tell us a little bit about what's going on with milk right now.
We do see seasonally tightening milk supply. Production has been hit by the summer heat like it normally does. Maybe a little more heat in the Northeast than normal. We're seeing that in the Mideast and Midwest and all the way into the Southeast. We have some comments from some of our producers that maybe a little bit older cow herd has caused the heat to be a little more significant than normal, but we don't see overabundance of that normal seasonal weakness in milk production. And we see solid demand, and we're starting to see a draw to the Southeast as schools will be starting up soon in the South and moving north when school starts. So that filling of the pipeline is going to really tighten the market as it normally does seasonally at this time. So tight spot markets, premiums throughout the Northeast, Mideast, Midwest. We have the normal heat in the Southwest, maybe a little less than normal in California in the very West, but seasonally we're trending where we typically are this time of year. And we're about to get to the tightest time of the year when schools start to fill that pipeline for the school milk. So expect firm spot market prices going forward, even though production may bounce back a little bit from recent heat as we move into the end of August and September, depending on what the weather does this month.
The milk production report for June said we were up 3.3%. Does it really feel like we're up that much in a lot of the parts of the country, Greg, where we've got milk, or does it just feel like a classic deep summer transition into fall tightness?
It felt like that in June, that we were up that much. It doesn't feel like that now, which is normal. We had a heat wave in June. All of a sudden, it went from being kind of cool and rainy to a hot spell that kind of kicked off the summer. That may have hit production a little earlier than normal, and it wasn't really a gradual warm up. It just feels normal seasonally as we head into the rest of August. I just feel like it's going to be tight like it normally is, and it's going to be hard to come by spot loads once schools start filling their school needs.
It almost feels like what you're saying is that the increase in milk production generally has been offset by the increase in heat this year, and it's just setting us up to roll into the fall feeling pretty normal.
That's what it feels like to me. Most of the milk supply that we know the best is that upper Midwest, Mideast, Northeast, and even with sending milk to the Southeast. So in those areas, for sure, it feels like a classic seasonal pattern that we're in.
Got it. Josh, what do you think that's going to do to the butter powder plants? Do you think it's going to tighten up our butter and our non-fat supplies, or do we have plenty of inventory out there right now?
I think it's a complete tug of war, Ted, because we went into the year feeling like we've got a lot of extra cream. We're clearly feeling the impact of the dairymen learning how to push the components in milk, particularly butterfat. That's put us in a situation where we're out seeking international customers for our butterfat in the U.S. And then all of a sudden we go into these summer months and there's a lot of anticipation over major processing plants coming online, particularly in the Southwest. And the giant question, how quickly do those plants finish their ramp up? Where are they at in their ramp up process? Are economics driving that ramp up process for the next 6 months? And where is that milk coming from? And if you look at the U.S. on a 12-month holistic view, it seems like we got a lot of milk. To Greg's point, as we get into the third quarter here, feels almost like we could experience a bit of a whiplash from what we felt over the past 60 days. The heat set in July. Maybe it's seasonally normal. Processing plants that I mentioned are starting to bring in more milk intake. Where is that milk coming from? We're at our seasonal low in milk production. Our comparables for milk against last year was a bird flu impacted milk production. So our comparables are maybe a little distorting at times. When you aggregate all of that together, I'm not so sure that we're sitting on cumbersome volumes of dairy solids in the third quarter. Now, measure that against the demand climate, and I think that might tell a different story.
While we look at milk production as volume, we see lower components, which is normal during the summer. So definitely lower milk production, but also lower components. So that leads into what Josh was saying too about less solids for dairy products.
So to clarify, Greg, when you say less components, you're meaning seasonally, not annually.
Yeah, the heat in the summer, it's typical for butterfat and protein to drop. And that's definitely what we've seen this summer as well.
All right, cool. I was listening to Josh speculate about demand, Mike, and it made me think of a question I should ask you and ask you to hearken back to your Kroger days. How much of an increase in milk demand would Kroger and Kroger's milk plants see when we would transition into the fall? What kind of bump is that from a Class 1 standpoint?
Really very little, because Kroger doesn't buy any milk for schools. So milk is fairly consistent. You will see some seasonal in spring in parts of the Southeast, but for the most part, they're more stable than most. But it's interesting you're talking about this, because I was just looking at that from the standpoint of working on cooling strategies for a couple of our customers. From July to September, your demand for Class 1 goes up roughly around 10%. As far as total milk supply, I think schools are around 8 or so. That's kind of what you'd expect it would be.
Okay.
Of course, they fall back again in the summer, and they fall back a little bit over the holidays. So as far as consumer retail sales, most of that shift that you see late summer is for schools. It isn't so much for home.
So is there much of a change in fluid milk demand at the home level when kids are home for the holidays versus when they go back to school? Or do they consume cereal pretty much in the same volume during the school year as they do when they're off for summer break?
Oh, they bump a little bit, but you also counter that with vacations. People take vacations in summer and they tend to eat out more, and food service doesn't use as much milk. Milk is one product that's definitely home consumed, unlike some other dairy products, which have a huge part in food service. I'll have more on that, because as I'm working on trying to figure out how pools are going to look, Ted, I'm getting into month-to-month changes. So ask me next month, I'll have better information for you.
August is the transition month every year. Maybe everybody goes back to school in September, but all the milk plants get ready for everybody to go back to school in August.
That's definitely true. That prep is starting. To Greg's point, what we're seeing out west, talking to some of my cheese friends out there, is milk still strong relative to a year ago. It's seasonally weaker. Components are seasonally weaker. That's normal. And they haven't had quite the heat wave, I think, that the Mideast and parts of the East have had, and even parts of the Midwest. But their year over year is still very strong. Whether it's still 3.3%, no one's willing to say, but they still say it is strong year over year. So we should have adequate milk. And I think it gets back to the point that's been brought up, is consumer demand and domestic demand in particular. And if we're going to have strong milk production, our exports can continue to cover that production that we are enjoying.
Well, that's part of where my head goes too. We've got extra capacity. We got additional capacity in the Southwest primarily, but some additional capacity in some other places in the country as well. And so even though milk production may be up 3.3%, that doesn't necessarily make everything feel like it's up 3.3% when you have additional capacity to fill. Where's the big places where milk tends to shift around this time of year? It's usually in the Mideast, which maybe with the additional capacity online in other parts of the country is feeling quite normal. And so they're not feeling like they're up 3.3%. The result is they're going through this summer and transitioning from summer to fall in an environment that feels pretty normal.
The overages on Class 3 last week, USDA reported a range of -2 to +3. Keep in mind, Class 3 is more affordable, relatively speaking, because the price is lower with the change in federal order pricing. But that kind of a range, simple average is a 0.5, 50 cents. That is not indication of a really tight milk supply, at least yet.
Makes sense to me. I got a cheese question again for you, Mike. Going back to your Kroger days, does cheese consumption at the retail level change much as we transition from the summer to the fall, or is it pretty consistent year round?
It goes up. Holidays, people consume. We used to joke that people eat cheese in November and December, then they eat skim yogurt in January to take off all that extra dairy fat they enjoyed over the holidays. Cream cheese is more seasonal. Butter, of course, is very seasonal. But cheese sales are, of the major dairy categories, closer to fluid milk and being more consistent. It doesn't vary quite as much, but it does vary. It's easier to plan for because your shelf life on cheese is a little longer, but it's pretty stable. It definitely goes up. You build for that. The cutting wraps are making product now to sell in October, I'll guarantee you. And they'll make product in October to sell in November. That's kind of normal, but it is not the kind of extreme. For example, with butter, you'll see Q4 sales will be double what they are some other quarters. Cheese, it's 10, 15%. Still significant, but not a huge number.
Got it. And then you also have the longer shelf life, and so they can just move that.
Yes. Yeah. And that's getting longer with technology. You can sell by in pretty much all packaged cheeses 6 months, and some are even stretching that a little farther.
Thanks, Mike. I'll go ahead and talk a little bit about cheese for everybody. Retail sales are flat. Food service sales are flat at best, maybe even a little bit below flat. Cheese production is up with the extra plant capacity and the extra milk, and exports have been making sure everything continues to clear. And that has left us in a position where cheese, right in this range we've been in for a while, 15, 20 cents on each side of $1.75, cheese has been clearing for a while relatively well in that range. The big question I think we've been asking ourselves is, as New Zealand milk production comes back online, are we going to be able to keep all of our export sales? I think that remains to be seen, but we are sensing that there may be some weakness at some point. Not today. Today, if anything, the cheese market feels very mildly tighter. And I say it that way because it feels tighter. But again, it's the first week in August. It always feels tighter in the first week in August as we get into the transition and milk gets pulled away from cheese vats to go back to school. But it actually feels, if anything, less tight than usual for this time of year. We're anticipating the fall bump in cheese prices to be relatively muted this time of year. And then we are watching closely the domestic demand side of the ledger and the export demand side of the ledger as we transition later into the fall. We have concerns about the ability of the market to be able to maintain cheese prices, let's say in the 170, 180. What about the protein side, Josh?
Maybe we should work through all of them, but let's start with the popular ones. The whey protein side is remarkably firm still. I think that we've talked in prior podcasts about all of the different demand drivers that we're experiencing. One thing that I failed to consider is the seasonal dip in milk and what that means for cheese processors across the country and an effective yield for the whey proteins. On the supply side, the plants coming online and the expected production from those facilities, in some ways that's been a little bit slower or disrupted from expectations. And that's all happening in a climate where demand is very, very strong. We've had remarkable new demand creation for acidified or clear proteins going into beverages and a lot of new product development. That then pushes the higher value products, forcing others to compete for the remaining whey protein isolate production. That then feels like it's cascaded and made WPC 80 still feel quite firm right now in the market, not just domestically, but also internationally. We see some really nice inquiries for all of the third quarter. I think it's starting to have quite an impact on the milk proteins. Every segment that uses higher protein products seems to be doing pretty okay right now. Even the snack foods and CPGs, they're all ordering slightly more than they did before. Even if those are low inclusion rate items, it aggregates to a noteworthy amount of product. That's the fun story in dairy right now, is that we really have robust demand for dairy proteins. Now, as you go down below those higher concentration of proteins and you get the 34% and sweet whey powder and some of those products, the demand isn't quite as robust, but the solids aren't there. The pull to process at a WPC 80 and higher is really, really strong. The storyline that really hasn't been as much fun as non-fat dry milk. That's just been a flat market. It seems like globally the demand for non-fat is stagnant. That doesn't mean global demand for dairy is stagnant. People, I believe, are just moving up the value chain and ordering more of the products they want and less of the commoditized version of it. We've seen a little price volatility in non-fat. I mean, it's August 5th today. I think over the past week, we've seen the non-fat market give up a nickel or so, 5 cents a pound. But that doesn't mean demand's weakened. I think that's currency. You can tie it directly to the value of the dollar and the movement that you've seen against our largest competitor in the euro for global skim business. I think that the non-fat story has been a bit boring while the higher concentrations have been a lot better. I really don't know that that's going to change much in the coming months.
as we look at prices and some downside risk on some markets. The revenue from beef on the farms remains very high, which is giving our producers a little more room to remain profitable with slightly lower milk prices. The whey side certainly helping on the class 3 as well. And class 4 still remains fairly robust despite a little weaker butter. We just want to remember when we're looking at that profitability of the farm, it's more than income over feed costs. That beef revenue is affecting producer incomes in a very positive way right now, and that should keep them a little healthier, prices lower than we might have thought otherwise.
You know, Ted, we didn't really spend a lot of time on butterfat, and I think probably a large percentage of the market was paying a lot of attention to what's happening there, maybe unaware of the global situation on butterfat, but it should be noted that butterfat remains very, very tight in Europe. Europe's trading at a significant premium to the US. And when we can put all of these storylines together in the international market, you have to think that that's going to influence the product mix out of Oceania and New Zealand's new season coming up. I think most people know this that are listening to the Milk Check, but they're entering into their spring season over the next few months. That New Zealand milk production base at least is off to a nice start, but is still a few months away from the real important milk production months. And so we'll have to see, one, does New Zealand continue with a strong start into the big volume portion of their season? Number two, what product mix do the New Zealand processors favor? And then what do we see happening in terms of any other disruptions that have gone a little bit quiet in terms of global trade and tariffs?
Makes sense. And I would agree with everything you're saying. There's a lot to watch in the butter space right now. And it feels so much different in the US and everything we're talking about in the US than it does in Europe. And then you've got New Zealand out there starting up, and they kind of sit in the middle, whereas they're going to have a much bigger effect on the global butter price and probably affect how much butter the US will export. But at the same time, they also have probably an even greater opportunity to export into Europe or into the places where Europe traditionally is exported and take some of that business because they're not going to be competitive where they're at.
Exactly. And their product's a little different. Our product is different than theirs. And when you talk about retail consumption globally, it's a little bit easier of a fit to displace European product with New Zealand product than it is at the retail shelf of displacing a darker, higher fat core product with a wider, lower fat based product out of the US.
Exactly. All right. Quick discussion today, but good discussion. Thanks everybody for joining us today. We're sitting here at that point in time where we haven't gotten into the point where we're seeing a ton of milk moves to the southeast yet. And so while things are starting to tighten up a little bit, we don't necessarily know how tight they'll get. Milk production's been up quite a bit this year, and so we're watching that closely. And then on the demand side, it's just been a weird year. And I think you can tell by the way people are talking, domestic demand is very flat, but exports have been pretty good in the umbrella of a whole bunch of conversations about tariffs, which has brought a lot of uncertainty to the marketplace, to say the least. Overall, prices are holding steady. Prices are still in a place where the dairy farmer is making some money, which means we don't expect that milk production to drop significantly anytime soon. We'll keep an eye on it for everybody as we move forward.
We welcome your participation in the Milk Check. If you have comments to share or questions you want answered, send an email to podcast@jacoby.com. Our theme music is composed and performed by Phil Kagi. The Milk Check is a production of TC Jacoby and Company.